Hello and welcome. Today we shall be taking a look at one of the largest British investment management and financial planning firms, Brewin Dolphin PLC. The company has a market capital of £864 million and is currently ranked 185th in the UK FTSE 250 index. In the financial year to September 2018, Brewin Dolphin had a turnover of £326 million and an operating profit before tax of £68.5 million, which gave it a margin of 21%. It currently pays an annual dividend of 5.38%, which is paid semi-annually, February and June. This dividend is covered 1.37 times by the earnings per share. The business can trace its origins back to the establishment of the stockbroking firm of John Dawes, a founder of the London Stock Exchange, in 1762. The company first listed on the London Stock Exchange in April 1994 at 29.6 pence per share. The current CEO, David Nicholl, joined Brewin Dolphin as a non-executive director in March 2012 and appointed chief executive in March 2013. He qualified in 1980 as a chartered accountant and joined Morgan Stanley in 1984, where he worked for 26 years. Brewin Dolphin employs around 1,700 people in 39 offices throughout the UK and the Channel Islands, and at its wholly owned subsidiary, Tillman Brewin Dolphin Limited, which is based in Dublin in the Republic of Ireland. The company offer unbiased recommendations in the interests of individual clients, which is either direct to private individuals via intermediaries, corporates or charities. They have no in-house funds. It is currently fourth in the UK wealth management companies. For the previous 5 years, Brewin Dolphin has had a consistent revenue of between £280 and £326 million and an operating profit margin from 2015 ranging from 17.8% to 21.8%, which gave it an average from 2015 of 19.9%. The forecast for next year is a revenue of around £348 million and a margin of 22%. With generated earnings for the previous 5 years of between 17.5 pence and 22.5 pence per share, the dividend has always been covered by at least 1.37 times the earnings per share. Brewin Dolphin has a dividend target payout ratio of between 60 and 80% of annual adjusted diluted earnings per share. It achieved 75.6% in 2018. The share price standard deviation for 2018 was 28, compared to 51 for the FTSE 250. The current share price is 2.4% above the 52-week intraday low. In April, it was announced that Andrew Westenberger would leave in May. This was the second high-profile exit within Brewin Dolphin's financial team, after Ben Thorpe, who served as head of finance, defected to Brooks Macdonald earlier in the year. In August, it was announced that Siobhan Boylan would join in early 2019. Currently the Chief Financial Officer at Legal & General Investment Management, one of Europe's leading asset managers, a position she had held for the last 5 years. Prior to that, she worked for Aviva for 12 years, where she had several senior roles, including CFO of Aviva North America and CFO of Aviva Investors from 2007 to 2011. The annual results released the end of November indicated a 10.7% jump in pre-tax profits to £77.5 million. Funds under management grew 6.7% to £42.8 billion. Discretionary funds under management rose 11.2% to £37.6 billion, which accounted for 88% of funds under management. Gross inflows were £3.2 billion and stable outflows £1.3 billion. Basic earnings per share jumped 18% to 19.5 pence, while Brewin hiked its full-year dividend by 9.3% to 16.4p per share. The first quarter results issued the 23rd of January 2019 stated that total funds had reduced by 7.7% and total income decreased by 1.6%. The investment performance and revenue were worse than expected, but discretionary net flows were slightly better than expected and higher than the 5% target of 5.3%. The half-year results are expected the 15th of May. The share price has fallen recently due to uncertainty in the UK market. This was reflected in the recent Q1 results, which saw a 7.7% slide in funds. The FTSE 100 index declined 10.4% over the same period. Brewin Dolphin has said that they remain confident in the growth prospects despite this time of uncertainty in the markets. The price-earnings ratio of 13.6 compared to the FTSE 250 average of 15.7%. Brewin Dolphin pays a dividend yield of 5.38% compared to the FTSE 250 average of 3.23%, and it's covered 1.37 times by earnings. Brewin Dolphin is continuing to move away from traditional stockbroking towards higher margin wealth management services, a market that is seeing double-digit revenue growth. The discretionary wealth management assets now account for 88% of group assets. At the year end in September 2018, the group held £186.2 million in cash, and the pension scheme surplus had increased to £11.4 million. For these reasons, I've given Brewin Dolphin an overall rating of 4.7 out of 5. Thank you for watching. Please leave comments below. And also like and subscribe for further analysis of UK company businesses.